Welcome out to Trade Masters presented by Tackle Trading. I got two amazing coaches with me, Coach Frank and Coach Bobby, to help us break down their midweek trading ideas. I love Trade Masters. I love to reset the conversation midweek here, guys, going into the last 2 days of the trading week. And man, it has been one of those weeks. And I'm not going to recap all the news here today. If you want that, come join us in the Traders Lounge. We have compelling conversations every single day, especially in this environment. But whoa, whoa, whoa. Market doesn't want to break out of a range. That's what we kind of talked about in the podcast. Test and support here, fighting back up. And all of a sudden, it feels like we're pegged to right around that 6,900 level. I did feel like the market today showed a little bit of those bull horns. Can they finish the job?
Piece.
And what I mean by that, can they get back up above 6,900? We also saw the NASDAQ showing some leadership here today as well. Actually, a little bit of what do I say? A little bit of
There we go.
momentum
I'm going to say
here
that much.
happening in the NASDAQ, whereas the ES is basing at that level. Oh my goodness, NASDAQ's testing some very important trend lines. And so, can those bulls finish the job? Can those horns stab the bears, make them get stopped out and get some Momo? That's what we got in store going into tomorrow. Obviously, a very sensitive environment on the overall market landscape here. So I'm really looking forward to the ideas these amazing coaches and just pure amazing technicians have in store. And I got the fourth coach here on my lap. She's kind of just taking it all in. She's
I
a
love
future
it.
coach of tackle trading, by the way. We call it the
Love it.
Nora indicator, and we do not go against it.
That is true.
Uh, with that said, let's talk shop here, Frankie. Coach Bobby, how you guys doing today? Pleasantries, and then we can get into the conversation. Bobby, how you doing today?
I'm doing good, and happy to be back for another Trade Masters here. I guess just to piggyback on your analysis. I mean, pretty much we're in that wait and see mode, here on the ES, and so, I'm anxious to see what the next steps are. But like I said, happy to be back, happy to have my Phoenix class tonight, and ready to roll.
Team Phoenix for the win. Love
Yes,
it.
sir.
Frankie, author of the Delta Dogs at Tackle Trading. Give me your
Yeah.
just before we get too deep here, give me your technical read here, just the up and down nature of the market. How are you navigating it?
It's messy and it's noticeably messy, if you look at, 1,000 stocks today. It's a little messy out there while we're stuck in this range. I mean, it was kind of messy in the range before the volatility of current events. It's not a Delta Dog's paradise out there right now, I would
Yeah.
say, but there's always something out there, right? You look under enough rocks, you're going to find something. And I found a few things today. Usually my Wednesday midweek scan is I have lots of things to cut. That
Mhm.
wasn't the case this week. I didn't have a ton of things, but the things I had, I did think were intriguing. So excited to bounce a couple of them around with the team. But not
Nice.
not a
Well,
market to be a hero.
no, no, not a market to be a hero. No, not while the VIX is above 20. I don't think anybody wants to sign up to be a hero on a bullish retracement on the VIX and a snappy volatile condition
Oh,
in the
someone
ES.
does probably.
Well, they're not here for the
They're
long
probably
term here,
yes,
Frankie.
that is fair.
Let's get into round one here, ladies and gents, and let's talk about that midweek scan. Bobby, we're gonna go with you first, round one. What do you got in
Sounds
store?
good. Yeah. So first pick, I'm gonna go with Walmart here. Walmart, we talked a little bit about Walmart, towards the end of the coaches show yesterday. I actually gave the students some homework. I didn't see anyone, but I think one student, shared their trade on Walmart during the day today. But what I liked about Walmart here is you got this nice little developing pattern. You got a little bit of a king's bed, pulling up here on the daily. It's just been, if you go out to longer term time frames on Walmart, it's just been a juggernaut, for a while. I mean, last year, it had a good run, and the year prior to that, it just keeps on running and it doesn't want to stop. So,
I don't think
why,
Walmart's the negative fundamental stock in an affordability environment.
right? That's a good way to put it. So, but Walmart's definitely an interesting, little look here. You did get beat up a little bit on earnings, as you can see here on the daily. But that earnings gap down, did hit some support zone here at the 121 zone, which was an old resistance zone, but kind of wanted the rebound. So now you're kind of just sitting in this little range here, trying to figure out if you want to break above that 129 or for
like I guess the better way to put it is just trying to figure out what direction it wants to go. And just by the look of this and the trend of this, I think we could get another leg up to that 130, the 135-ish zone, which would be around where your pivot is. But for me on Walmart, I came in here. One thing about Walmart when it comes to their options, they're very liquid, and so there's a lot of different things you can do on it. I know last night we talked a little bit about doing like, we've been talking about debit spreads in the coaches show. So we're throwing around traditionals and maybe a little bit of some tweeners, but and you can also we also were talking about a little bit of cheapies, but on Walmart here. I think one of the things we were talking about in the step channel today was I think it's better to play more of a traditional just with by how the trend is on Walmart. And so I went out to April on here, and I didn't mind the look on the 130 by 140. You get about 280 on that, which is not bad. I actually went out one strike to the 135, playing it more like a tweenerish type of play. Went to the 135 by 145 for about $1.50. The reason I like that is because I think Walmart can definitely get to the pivot high to 135 and get into those strike zones. So why not, use the 135 by 145 as my target? So the 135 by 140 would be my target there. Entry wise, to get in on this, I'm looking over, I think it's Friday's candle, which is about 128.75 here. You get over that, that's confirmation to me. Stop loss would be below yesterday's candle, which is around I think 125.67. So my stop would be right there. Now with using a tweener, I might give it a little bit more room. It just depends on the trader. But relatively, my entry would be over Friday's candle. Stop would be below Monday's candle. And like I said, using my targets as the 135 by 140. Um, Entry wise, one thing I will say on King's Bed, I do prefer more of a confirmation
Mhm.
instead of just doing a regular aggressive trigger.
Yeah, I do
Reason
too.
for that is because as you can see here, it's been choppy here. You don't want to get in and get faked out. I've back testing my journal on King's Bed, prior my day, even working with Frank, I noticed, a lot of times if I do enter aggressively on King's Bed, I'm more inclined to get, whipsawed out. And so I like to wait for that confirmation before getting in. And I would do the same here on this 135 by 140. So give me a confirmation above Friday's candle and I'm all in there.
The King's Bed pattern is a very popular pattern at tackle trading since we kind of labeled it the King's Bed pattern. But in general, it's a deeper pullback through consolidation. And that's kind of what you have here. You got a deeper pullback following the earnings print coming down to the 120 level. That's the previous old resistance level, new support. And it's really about the consolidation there because you don't want to fight those downward drifting moving averages ever, like, especially the nine. You just don't want to fight that nine. And so you see some consolidation, but consolidation is not bullish, it's neutral. And so that's one of the reasons why you want to see that confirmation because that gets you back into that bullish territory. So you got a slightly out of the money bull call spread here, kind of a cheaper risk type trade, I would say, a low dollar baller type scenario here. Going out of the money here is also a popular way to kind of get a breakout, right? Because you expect that momentum there. And so the question I have for you here is, are you going out of the money because of the King's bet? Are you going out of the money because of the overall environment, or does the environment not play a role here? You're just like Walmart and you're just waiting on confirmation and you like an out of the money bull call spread.
I think it kind of plays a little bit of everything. I mean, I love the trend on Walmart when we were looking at the monthly, it's just been going up. So I do believe in the 135 by 145. Could it get there? Yes, I believe that.
Mhm.
Another thing is you get your confirmation above this candle. Since I'm waiting for that confirmation, it depends on if you get that confirmation, it'll be around that 130. So,
Mhm.
you're a little bit closer to the 135 once you wait for a close on that confirmation. So I mean, that's another factor, but just overall, I mean, Walmart in general, it's just like as you can see, it's been
The
nonstop.
weekly chart has been dominant. There's no doubt about that. And you're setting on
Exactly.
you just pivoted on a weekly support level, and notwithstanding the negative reaction to earnings, they hit a record number on their revenue out of that
Yeah.
earnings. So
Yeah.
I kind of feel like earnings is getting a bad rap here in the market. And it's like, oh, the volatility in the market is like, well, it could have something to do with the war in Iran and not necessarily, and all the other geopolitical factors and not necessarily, you know, the record revenue handle we saw on Walmart itself. Yeah, I definitely have a positive feeling here on Walmart, and I like the confirmation here. I think from a strategic way, the bull call spread at the money bull call spread, slightly out of the money bull call spread, slightly out of the money call option. If you want to be a little bit more aggressive here, I think with confirmation, most things do play here. Frankie, love
Yeah,
the Walmart pick out of Bobby. What you got in store for us?
I do. I really like that Walmart too. And the fun thing about spreads is there's lots of ways to do it. I actually like the May 130, 140. That's the beautiful thing about spreads. Lots of
That's
ways.
kind of that at this out of the money traditional one, I would say.
Yeah, so yeah, that beautiful thing. But I do like your Walmart play, Bobby. Certainly one of the names on my short list. I'm going to come at you with Kava Group though to see if I can beat Walmart. CAVA here just had a big response to earnings. Just a little over a week ago, broke through a pretty significant, I would say, level of resistance around $73. That was an old floor going back into, summertime last year. That was the ceiling throughout basically the moment it broke until the breakout here. So we got a pretty good level of history in the, roughly speaking, 73. Blew right through that and just ran, Maddie. I mean, that was a runaway gap that you saw there on Kava. Obviously, that's not the type of candle I'm interested in chasing, but that is the type of candle that puts something on secondary pattern watch, right? Okay, if I get another pattern after that candle, I'm going to be very open-minded to it. And lo and behold, I kind of got that good old-fashioned, what I like to call the meat in the middle, right? The stock drifted down while the 9 EMA came up. Yesterday, we got a hammer at the 9. Today, we got confirmation and upward movement in price. So nothing fancy, a very standard post-earnings go or don't type of scenario. And in my mind, don't really have a lot of resistance on Kava. You're obviously going to have the recent swing at about $86, which is where I would target for T1. And then around 90, and I'm going to call it 90 because that's also where its 20 monthly is, but that's kind of the shelf that you're seeing back in August. So that's kind of level to level, right? The swing high and that next level of resistance, I would have it at that $90 marker personally. Mostly because of the 20 monthly, you know me, and my longer term moving averages, but puts us in a really nice little risk to reward scenario here on Kava. Whether you're building, I think for me, all I need to see is anything over today's high, like whatever an individual trader's rule. That's all I would need to see. I think you have two logical locations on the stop. I'm going to side with option A, which is under today's low. That's not as good as option B, which is under the hammer from yesterday in the actual swing low, but it costs lots, if quite a bit less, not lots, probably too strong, but it's going to be a lot cheaper to go under today versus under Thursday.
You got the 9 either way.
You got the 9 either way. And with kind of the current conditions of the market, I'm kind of in the
You don't
volatility
trust it that
playbook.
much. Yeah.
Yeah. I mean, I trust the setup, but I don't trust the market, right? Hence, I'm in volatility playbook. Like probably most of us here at Tackle Trading are. You know me, I say AVT, but I don't need to be a hero. This is a really good setup with a really good risk to reward. Lots of ways that you can play Kava. You can shares. I like the 80 by 90 for April, but again, when it comes to debit spreads, there's lots of finagling that you can do. So I kind of think it's kind of a dealer's choice type of situation. I don't think it's, this spread is so cheap you have to trade it type of a deal. I do think you can get some reasonable spreads on it right now if that's the route you want to go. Shares play. You know me, I'm not much of a pop a call kind of a guy. Don't want to sit through too much, whether I'm choosing today or Thursday. If that goes, I would expect that you do come back down into that 73 level. And I'd rather just reevaluate there than sit
The 80
through
by
that
90
personally.
spread makes sense to me.
I thought the April by
44
90 stood out. Yeah, I thought that guy stood out, especially if you're going with a stop loss, right? You're
net 25 delta.
25 delta, risking about 150-ish dollars probably if you're going to the
very
low.
traditional bull call
Yeah,
spread. I would
very,
say that.
very standard. So
Yeah.
I think this is a really nice little story on this little restaurant group here. So sign me up for Kava.
Yeah, and that's something that, you mentioned the nice little story. That's something that we like to look at Tackle. We like to look at the technical story. Like we like the story to tell us something. You know what I mean?
Yep.
And I see an earnings gap that ran away, finished towards a high. The next 2 days tried to test down, but finished towards the high. Had a downward pressure in price the third day. Had another downward pressure in price the fourth day, but finished towards the high. And then on confirmation candle, finished towards the high. So despite the fact that we're talking about a bull flag to the 9 EMA, 5 out of the last 6 trading sessions have finished towards the high here, Frankie.
Yeah.
Like that's a technical story. That's control. That's bears not getting anything. That's bull on bull crime. That's bulls locking in profit and bulls pushing it back up. And so I like the technical story here. And when you look at the two food companies here, Cava obviously in the restaurants in discretionary, Walmart, cheap food in consumer staples. Yeah, both look pretty good technically here. They certainly get the passing grade from this technician. I do prefer personally the Kava setup. Just it's a go or don't type setup, and I'll take those over King's Bed. But that King's Bed on Walmart looks pretty good as well. Team,
Absolutely.
let us know in the backdrop which is your favorites as well. Let's move on to round two here, Frankie. You're going first in round two. What do you got in store?
Come along and go on a fantastic voyage with me and my man Coolio, because we're ready to slide, slippity slide, my man. SLDE. We got a little multiple time frame breakout brewing, post IPO, clear air just about to happen here on Kava, or a Kava slide. I'm sorry, got Kava on the brain. Must be hungry. I love the response on earnings. Big bar into the known resistance level and then just chills, right? Nobody, well, at least nobody that I know, wants to buy a breakout that's ran from $17 all the way into 20, right? We want the breather. We want the break. And that's exactly what we've seen over the past, 5 or 6 trading sessions, right at that known resistance level, the level in my mind, at least, that makes the most sense for it to pause at, right? So nice consolidation has allowed it to breathe, has allowed that 9 EMA to come back up. And quite honestly, Maddie, if we can break this, and it's right approximately 20, right? I think we can all kind of see that resistance level. I think the high water mark going back in December was 1989. I'm just going to call it 20 because by the time you get ATR rules, it probably
I
is,
just
right?
do 20.
I'm just going to call it 20, but that's the zone that I'm looking at. I look at this and I say, you know what, if this thing can break that, I don't see any logical reason whatsoever why we aren't getting back up to that IPO high, which is basically a hair under 26, 25.90, I believe is the exact number, which that would be my target price. And
There's
then
not a pivot to target before there.
there's nothing that scares me, right? You can pick any number in between there for T1, right? I know I would
22,
not have.
23,
Fair enough.
either one.
22, yeah, 21,
Yeah.
22, 23. Like you can, like I say that's negotiable, right?
Mhm.
When it comes to targeting, because I think that's probably more managerial. I like this for the big upside, and I expect that if we can break this, there's no technical reason, right? We can't work back up into the top shelf, which presents us with a really nice risk to reward opportunity. Whenever you're dealing with a breakout, I mean, the number one thing is you want to be underneath the breakout channel.
Mhm.
That's a must-have, right? You want as much holding it together. Depends on how long it takes. Ideally, the stop's underneath the 9 EMA, but if this were to say break tomorrow, I'd probably have a stop under today's candlestick low. So I wouldn't mind a couple more days of consolidation to get that 9 right up there and kind of give me that springboard through it. But it'll break on its time, not on mine. So, I do think the stop is a little negotiable. I would just suggest individual, breakout stop loss rules is how I would kind of word that. Some people are going to want to give it more room, some people less, and to each their own in that regard. I think the breakout's intriguing. I think risk to reward is really solid here on slide.
I think it's a great multiple time frame setup, and I think this is kind of one of those textbook situations, Frankie, where and what I mean by that is the type of pattern you want to see develop at a multiple time frame.
Mm-hmm.
You don't want to chase a rocket ship going into a breakout. You just don't.
Nope.
It's just it's not a repeatable thing, and that's what trading has to be. That's what systematic has to be, is something that is repeatable. And chasing every candle going into a resistance level is not a systematic way of going about that. And so everybody sees the level of resistance, and yeah, you could say 1990, but I'd just say 20 as well.
Yeah.
When you see that $20 level of resistance, that's the anchor. You want to see that pattern develop with that anchor. And the first pattern you want to see, high base, simple consolidation, allowing that 9 EMA to catch up, tagging that going into that multiple time frame. It looks pretty good. Given the fact that you're targeting to the tippity top here, would you suggest that you can pay for confirmation here?
Yeah, I think you can pay for it. Yeah, I wouldn't go all in, and I'm always open minded to a scale, right?
Uh-huh.
Little, quarter of a position at, ATR roll over 20 and then add on the confirmation. But yeah, I think that's an excellent way to look at it. We got a big window to go. Yes, it might break and then run to 22 that day and you'll be kicking yourself, but it probably won't, right? So getting
Isn't
that
that the
confirm
thing on every potential trade on a breakout,
that
though?
that's the that's the
Right.
trade-off, right? You
Yeah.
want the confirmation, you give up the control. You want the control, you give up the confirmation.
Mhm.
Scaling in does kind of let you kind of play a little bit of both. But yeah, I
Mhm.
do think the confirmation would make me feel a lot better in this particular case. And you do have the
Yeah.
range to justify paying for it. Absolutely.
I agreed with that. Omar said something really good in the chat here. The volume profile really supports the bull move here too.
Yeah.
And that's typical with earnings. You're going to see an expansion there, but even before the earnings print, you were starting to see the expansion, and it's still, even in the development, it's still up there saying, nope, 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 we're ready to go.
Yeah.
Like it with confirmation. I think
Yeah.
that's
Good catch.
a good technical setup
Yeah.
there,
Good catch,
Frankie.
Omar.
I like both your technical setups, the multiple time frame breakout on slide, the flag based pattern post earnings. Both of these are post earnings setups, by the way. So
Yeah.
what we call a secondary pattern following earnings. Both of these fit that bill really, really, really well. So like them both. Well done, Frankie.
Thank you.
In
Thank you.
honestly, tough to find gems in volatility. It it can
It's
be.
a little dirtier out there than it has
Mhm.
been. That's for sure.
Yeah, you got to go hunt a little bit here, and you did fine work there, brother. Thank you for
Thank you.
that.
Thank you.
Oh, I think I said that last time, Reno. Why don't we change your name in YouTube?
Oh,
Trying to fool me over there.
yeah. You're
All
Omar
right.
now,
Trying to say stuff and not tell us the
Okay,
same.
fool me once on you, fool me twice on me. I think that one's on me, this one, Reno. So I got egg on my face on this one. Um, Bobby, what do you got in store for us in round two here?
So I'm gonna go a little different route. Frank's here, at the top edge. I'm gonna go at the bottom with El Toro. A little
What's the there,
reversal
Bobby, real
on
quick?
ETOR.
ETOR. Thank you.
This is kind of like Frank's was, I think his was more of an IPO. This is kind of a newer stock as well. It hasn't been around too long. I think it came probably early of 2025 is when they
Yeah,
first came out if you go on a
about 2 years
weekly
ago.
chart.
Yeah.
So, and ever since its IPO, it's just been getting pretty much beat up and, get down, down, down. And hopefully this earnings, it looks like, this past earnings, gave it a little bit of a jolt. When you look at the daily, you got a nice little gap up into that, 50 moving average here. And so you just kind of created a nice little resistance zone here. What I like about this one is, if you go back over to that weekly, sorry to make you go jump
Oh,
back
you're
time
good, brother.
frames, you are lined up kind of perfectly with that 20 moving average here. If you can get a break above that 20 moving average, you don't really have nothing to contend with unless you do have that 9 monthly ahead. And then from there, it's pretty much clear air. And so, what's nice about this one, and there is a lot of reversals out there. I know Frank posted a list last Friday with a whole list of reversals. This one looks like it's more, you get that confirmation. You had a nice candle today, a nice little confirmation candle tomorrow. Pretty much lines up nicely with that weekly 20, and you get a break there. You got a nice little, kind of a clear air, a nice little gap into that 9, which gives you some, room to play with. One thing I will say that I like to do on, plays like this, especially when you have a 20 weekly above. I do, and it's cheap enough. I like doing like a little bit of a scaling, on this with stock. That's actually, it's one of the one things I like doing, especially when you're in volatility playbook. I do like to do more of a, add a little bit here, and then you get that confirmation to add more, just kind of how you guys were talking about on slide, especially with this one here. If you want to get in tomorrow, by all means, that's scaling in would be my prefer method. But if someone wants to wait for that confirmation over that
I think
20
that's
moving average,
extremely important, Bobby, on the scaling in here because you're asking for a break of the level in the pattern, and then
mhm,
you're asking to add on top of the 20. And so you're asking for two good candles here.
yeah,
But in the market right now, I don't know if you can ask for two good candles.
yeah,
You can
yeah,
And
always ask.
well, you can ask. I don't know if you're going to get. That would achieve the market breaking out of a pattern that it hasn't been doing recently.
yep.
And so the scaling in approach is saying, okay, I'm willing to take a stab above this level here with a partial position. And then if we get that ultimate confirmation above the 20 weekly, well, guess what? You probably got a much improving market condition if that achieves that. And so I love the scaling in part of this conversation.
Yeah, I learned that from when I did my coaching with Frank. I would always be a very aggressive, and Frank knows that too.
Yep.
And then he was like, "Why don't you try, maybe playing around with like a little volatility playbook of, adding a little bit and then adding on top of that." And so I did that, and it kind of, opened my eyes as another tool in the toolbox, as
Easy
something,
on a stock kicker too.
yeah.
Yep.
Oh, yeah. And
Mhm.
so, yeah, that's the kind of strategy I would approach on this one because I do like this one because if you do get the break of that 20, there
Lots of
is a
room.
nice little run. Because I mean, if you go back over to the weekly real quick, you'll see there's a little trend line here, forming on the weekly here. It depends on how you draw it. I kind of draw it just below that. So, you broke that trend line. So you're within,
Oh,
you
you
broke,
have this one too. Like there's multiple trend lines here.
yeah, just depends on how you draw it, but you're within.
Either way, you're above it.
Either way, you're above it. So you break this 20, I think there could be some momentum, going back up into that, 45, and maybe one day it'll get up to the 65, where it first started at. So I like a little scale in here. The way I would approach it just with stock, I would, look at, going over either, I think it's the 217 candle, which is about, 33.88 would be my entry. Add partial there. Stop loss, I would put it under today's candle, and the reason being is just you do get that 50 moving average. So you have the 50 moving average, plus you have, a cluster of the 9 and the 20 with it too. So you have some, a little bit of help
Hmm.
there. That's my preferred play at target wise. I'd probably target into the more of the, once you get the break over the 20, more of the 38 by 42. Um, I would say, yeah, 43-ish. Sorry. So I'd go probably 40 by 40 by 43, which the 40 around the 39-ish zone is where the 9 monthly is.
Hmm.
So, target there for T1 and then into the old, little pivot of around the 44 zone. So
Yeah.
those would be my
Yep.
two targets. But I treat this one more as a scale-in.
Yeah, because again, I think Reno makes a good point. Same point you're making here. There's a lot of reversals in the market, and a lot of these reversals would really benefit from one more
One more
week.
week. One more
Yeah.
They would
week.
they would really benefit. And again, like Frankie always says, you can ask doesn't mean you're going to get it. And that's what I'm asking for because all of a sudden, one more week brings down a lot of those weekly nines into the breakout levels and brings those down those
Those
20 weeklies on a lot of them as well. And so more time in development here would not be necessarily a negative thing. You don't get a pick when it breaks, and it could easily consolidate for, and again, that one more week is only 2 more days.
It's only 2 more days.
Yeah.
Yeah,
That's all it
yeah,
is.
that's just
So
the
like
rest of this week,
it's just
right?
the rest of this week. Yeah. So a couple high inside candles here do nothing but solidify the pattern, in my opinion, going into the weekend. So that's something to keep an eye on as well.
For sure.
Well, Coach Frank, out of all four of the picks here, Kava versus Walmart, Slide versus eToro, which one's your favorite?
I gotta say it slide.
The
I gotta
multiple
say,
time frame high
yeah, I gotta say it
count?
slide. Yeah, I like these, like, not a lot of history, post IPO, working up the ladder type of things quite a bit. So I'd probably side with Slide.
Yeah. Team, let us know which one's your favorite of the four as well. Bobby, looking at all four of them, same question to you, my friend.
That's a tough question because I mean, not
They're all four pretty good picks.
they're all four pretty good picks. You know, Walmart's never treated me bad. And Kava, the setup is just, nice. You know, how it's, you got that momentum candle over those, weekly and monthly moving averages. I'm gonna have to side. I can't just pick one. That's the hardest part. I'd go with the first two for sure. Those are probably my two favorite just
Yeah.
because the setups and where they're at. So but I can't pick one.
I think they're all quality setups as
Yeah.
well. If there's one that I like a little bit more, and I like them all, but you mentioned Kava as well, Bobby. That the technical story on Kava stands out to me a little bit here.
It's
A
intriguing.
little bit of a go or don't type setup here as well. And I'm a sucker for a multiple time frame breakout. I'm a sucker for a post earnings flag. Like there's a lot to like here, but I'd say Kava is my favorite out of the bunch. But they're all pretty good, I would say.
Yeah.
Yeah, some
All right.
interesting follows for the rest of the week, I hope.
Well, once again, Frankie and Bobby, thank you so much for joining me in Trade Masters.
Yeah,
This
great to be here.
are the core of Trade Masters, so we all appreciate your midweek efforts for our community. And
Sure.
for those of you finding tackle for the first time, make sure to hit that nice little subscribe button. We go live in Trade Masters every single Wednesday. We post the Trading Justice podcast every single Tuesday morning, and you can find a healthy dose of content on the Tackle Trading YouTube channel in general. In the description below, we got a webinar coming up on March 17th, the Precision Trading webinar. This is the swing trading webinar at Tackle Trading. And if you're interested in attending this month's free webinar at Tackle Trading on precision trading, all you have to do is hit the link in the description below, hit the register now, and you will be registered for Precision Trader on March 17th. Once again, the art of swing trading. And what my hope is, Frankie, is the next 2 weeks produces a pretty decent environment where swing trading comes back full force.
Yeah.
We'll have to wait and see on that one. Right now, not the greatest swing trading environment, but this too shall pass, as it always does. There,
Exactly. Trade the market you have, not the market you wish you had, right?
100% great advice. Team, hit that like, share on the way out the door, and I hope everybody has a truly blessed and wonderful rest of your day.
Later, team.